Good morning to our MMTs and people worldwide. Foreign traders are welcome to come here. Canadian traders, all different traders around the world are welcome to come here. Get an account. We'll give you buying power. We'll do lots of things for international individuals um, because we know that they will do the right thing. I'm just going to go ahead. I got a daily chart of the S&P 500 on a daily level. What I am going to show is that we said that January we would go down, and we certainly did. We rallied right back up off of this low that we put in. And one of the things that I will show very clearly is where that bottom is and what this bottom is like. On a daily level, we hit 1739 right here. That low there was 1743 on the daily, and on 2-5 that was the final low of 1737.92. It bounced on a closing level to 1751. This was that January effect. We rallied straight right on up. We've been in a range. We had another rally, and we put in this top right here. And that top, once again, was 1897 now. And on the daily level, we got down here. So let's go back to the date, 4/4 of 2014. This low right here, well, actually, let's take the days right here, 4/4 to 4/11. The open was 1830, the high was 1835, but check it out. That low was 1814 on a daily level on the S&P, with the wall of resistance on a daily level. Now, we have gone from that low that I just said, 1814, and we have rallied up. We put a high in right here. Once again, that high is 1884, this very narrow range high of 1870, and we dropped from 1870 on 424 to this daily low on 428. That low was 1850, and we rallied right on up again on lower volume to the high of 1891 right here. So what we are going to say is that the bull hasn't had enough volume yet to get through this daily format. However, I'm going to be telling you a lot of other things that will be working on the other charts. Okay, so the problem with the S&P is that it's gone up on diminishing volume. That bull is not at full throttle right now. Yes, on the daily level, it's very, very bullish. Yes, the 10-day is at 1876. Simple. The 20-day simple is at 1862. The 50-day simple moving average happens to be at 1862 as well. So, the 100 simple daily moving average is 1838. The last volatility was 12 handles on the S&P. That is the daily. Now, I'm going to show right here the weekly and the bullishness about this weekly format as far as traders go on this weekly. Okay? And we finally get down to a level in the S&P that I'm going to go ahead and blow up the weekly. Here you have MMTs. You have a weekly where we hit that support level on that S&P. Yes, this was from the January selling right here. But we're going to take that low and we're going to run that thing right up here on this weekly level, and we're going to draw that. That's going to be 1840 in the short term. Now, one of the things that we're clearly going to talk about is why do we have that wall of resistance with this really outrageous bull run that we've had. Is that, let's take a look at the 10-week, the blue line. It's rising. The 20-week over here on the weekly, it too is rising. Take a look at the volatility right here. I'm going to draw a trend line. This was the lows right here. That was a sell down. That was your top. And we came right back and we're testing those highs. Now, it is the month of May. And I will tell you about this weekly and the monthly and the daily is that we are going to go up. We're going to hit that high and we're going to have a reversal. This chart from the January effect down here on a weekly level has been 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks up here, closing up toward the high. Now, listen, that is very, very bullish. However, there's going to be a problem. We're going to come down. We're going to make that high, and then there's going to be a reversal, just so you know. All right, one of the other things that we're going to show you on the S&P 500, again, we've been around for 32 years. So back in 1996, what did we get? We got a great bull run, and then we had a big pullback. The dot bomb was 2000. 2003 was in the Bush administration, and we hit the highs in 2007, and then the financial crisis came in at that point. Since we have gone there, we have gone parabolically up. Let's just take a look at what the public does look at, and they look at the following. They're going to look at the highs as a bullish thing, as it is. I am going to say, though, that this movement average convergence divergence is way up here at the highs. We are going to have a 10% pullback during the summer period. The spring rally that we've had is a spring seasonality rally in from those January 2014 lows on all the indexes. Now, having said that, I'm going to go back over here. I'm going to draw another horizontal trend line, and I'm going to take it up. This was a major high. This was a breakout in 2013. Here we are up here at the high end of the range. We've got everything that is very bullish about this S&P. And what I am going to show you, though, is that this S&P and the Dow are all identical. We are extremely overbought in the short term. Yes, we've had a 5-year run, and that run ended at the end of March to make that a 60-month profile. Now, I'm going to tell you what the 13 and 14 is, that we're up here at the wall of resistance. I will be happy to point out that we are going to have a nice correction in the S&P 500. And on a monthly level, it's about as bullish as you would ever want. And it is, because we had that big move finally in 13, and then we made the highs, and we've had some pullbacks. But here's the bullish part. The minute that we got close on the S&P right here to that weekly, that's a 10 weekly moving average, and it is rising, that's bullish. And this low here is much higher, and of course this one here. So on this monthly level, which is a narrow range trading format for our traders, is that we're going to be happy to show you one thing. And here it is. This is the low. That is a low. This was the bounce from the low of January. We sold down, we came up, and from that point, we had that sell on that low, which was roughly where we got another bounce. And then now we're starting out May. So I'm going to blow this up because I want you to see these right here. And here's the part I want you to see. I want you to see the high ranges. I'm going to point them out, MMT. Here was the high ranges, just so you know. That high on the month of March, the open was 1857 and the high was 1883. And from that high to this low here on calendar month of April, we hit that low of 1814, and currently we're right back up here at this major bull run high. But I am telling you that we are going to have a fairly good size correction, and you do not want to get caught in certain stocks in the S&P at 52-week highs. This is about as overbought that I have seen this in a long, long time, and it is. So what I'm saying is, on a monthly level, we are going to have a big correction. I've showed the daily and the weekly, and there are certain options. And what I am going to say is, from this low, when I come back from the 1996 low, I'm going to come all the way right through here, right here to that top. And that's that 1996 low in the S&P. That was your correction, and this served as a very long-term rising resistance until we had the collapse. Since then, we have shot straight up. And I'm also going to take the year 2002 low and the March of 2003, and I'm going to draw another horizontal trend line, and I'm going to draw it right here for that support level. And it's going to come right there. That's from that you got 1996, you got 2002, the breakout was 2003, however, and you can see this diagonal trend line where we had that correction back in '08, and we've gone parabolically up on the monthly chart. All the indexes have. So once again, I will tell you beyond a reasonable doubt, there is no doubt, this is before the fact, not after the fact. Here we have stockmarketfunding.com. You can get a free trial, click on it. You want to open an account? We have two different kinds of an account. Prop traders, you're welcome. Regular casual day traders, you're welcome. Get started today, you're welcome. Go through the videos, go through what happens in the pattern day trading rule. One of the things is that the $2,500 thing is we don't give leverage on that. I'm going to be changing that because that's for options only. Okay? And that $10,000 deposit to get $150,000 intraday. And those people who make a living at trading, you're welcome to get here right now. You can also type in here, get all of the live analysis that we do. We do everything before the fact that you can know. And we have multiple years that you can go back and look at various different analyses. One of the things that I'm going to say is we are going down on the S&P, and that we will keep everyone updated. And this is your highs here for April, and we don't have enough data yet on this monthly bar, which is May Day. So once again, we welcome you to join us for free on the free trial. You're welcome to get the analysis that we have to help protect you. That's the most important thing. That's a weekly moving averages are rising. They're bullish, but we're just too overbought. And we're overbought on the longer term. And once again, this daily chart where you can see 2014, we rally up, we pull back, we've been in a good range, we dropped down, we tested that support level right over here when we broke through that resistance level, and now we're at the all-time highs. All right, people, I'm going to say one thing. You better be careful, because these indexes and the 5-year bull run is hitting the top right at the moment. And we had lower volume on the upside. However, that dip mentality did come in and buy. Short sellers at our all-time highs. The tech bubble, which I'll cover in a different segment, is that technology stocks have had the greatest run. They too have to pull back. And what the market's going to do, it's going to show what the strong trades are individually and where the weak ones are individually. So once again, this is a conclusion of the S&P 500 daily, weekly, and monthly with a 10% correction that's coming through the summertime. Beware, know when to take profits, know where to put your stops, know how to do everything right. If you need management, come to us. We will help you manage your portfolio. If you're an investor, if you're a day trader, we'll help you and give you the entries and the exits. And prop traders, you're welcome to come in here and run your business accordingly. And we just let everyone know that there's a lot of risk up here toward these highs.